How do we behave at different times in the market?
So, how have you been doing? Good?
Good, yeah. Really
Good weekend for you? Good week?
It was a great weekend because it was there was a lot of free time in
Okay.
there. Yeah.
That's good. Yeah.
Yeah. How about yourself?
Good. Continuing to break out the golf equipment again.
Yep.
Joining my first ever foray into golf league. And so I'm
Okay.
sure that I will finish probably at the not bottom. What's the better way of saying it?
Like the bottom quartile.
Bottom quartile,
Yeah.
yeah. That's where I think my handicap will at least line up. I'm going to have fun out there.
Yeah.
Going to have a blast.
Where are you playing?
Curry.
Okay, cool.
As some
You know who,
people downstairs call it Curry National. And
What
so,
day are you playing?
Wednesdays.
Okay. I have a client that plays.
Really?
In that, yep.
Yeah, we should talk about that after.
Yeah.
That's pretty crazy. But very much looking forward to it. I mean, if I get out there, I'm just having fun.
Yeah.
I love
absolutely.
it. I think with an asterisk next to it, I think I've solved some of my swing issues. And so driver's looking good, hybrid, fairway wood's looking good. But you know what? Those pesky irons, like I think I've solved some of it, but I think I've opened like Pandora's box up. Like before, like it was like 50-50, I hit it or I chunk it. But it's generally going straight.
I think I'm just watching too much on social media, right? You watch all these different swing paths and
then you start thinking emotionally about it, and then like midway through swing, I'm like up,
yeah.
no,
Wait,
in,
inside
no,
out. Yeah, right. And you're like, or like for instance,
Yeah.
you talk about irons. It's a totally different swing path for like your
So different.
driver and your iron.
So different.
And so last year I kind of figured out driver, and so this year the goal is to figure
Likewise,
out
yeah.
iron. But then when I'm in the middle of like swinging my driver, I'm
those
like,
swing
wait a
thoughts.
minute,
What should I be
which
doing?
one is it? Yeah, and then
And
I
so
just screw it all up.
For me right now with my irons, like I think I got something good going on. So 50% of the time, it will go where I want to go.
Yeah.
Now 50% I might slice, and so I was joking with some of the other guys and people at TriStar. Maybe just aim left the whole time off my tee shot, and then allow my slice to play naturally.
You know what I think it is? It's always your second attempt.
Okay.
Right? So you just should be able to play 2 balls for every lie, right? Because it's always that second one that seems to work out well, or often the second one
Sure,
seems to work out well.
But I can tell you what, from last season, seeing all those videos online, making me act more emotional, me thinking, hey, should I be doing this? Should I be doing that? The swing thoughts, nonsense. Now I just go back to, maybe it's muscle memory. I mean, I took a lot of credit to my parents. I took a lot of golf lessons really, really early on in life. And so maybe it's just kind of reverting back to some of that. But I find that is simply some of the best like pieces of advice that I've been able to go follow. And actually, I mean, I'm not a good golfer, but I've been seeing some actual good progress from that.
Good.
Sticking to what's true long term
is important.
Like investing, today's episode, if anyone can believe it. So
absolutely. So behavioral investing. How do we behave at different times in the market? Of course, as we all know, our listeners, viewers, and ourselves, things have been a little tumultuous lately.
Oh, sure.
VIX has been at nearly record highs. Tariffs on, tariffs off. Are we going to raise rates? Are we going to reduce rates?
Causing some gyration. Yeah.
And causes a lot of emotion, right? More than anything. I think, at the end of the day, humans were emotional animals and can play a big role in our decision making.
And of course, the media doesn't do a good job at it too. And so they might say the Dow Jones drops by 1,500 points, but okay, 1,500, large number. But thinking about it from that perspective, let's go flip it on its head. Maybe the Dow's down 2 or 2.5%.
Right.
Or even thinking about it like a third layer deeper, the Dow is comprised of but 30 companies.
Right. Yep. Very small sampling.
Versus
right?
the S&P 500, or maybe thinking like a whole broad market per se.
Yep. Much more accurate. Yeah. And then you think about asset allocation, right? So you get these, clients that maybe they're conservative and they get really concerned when they see a pullback in like stock market, but just sort of forget that, oh, wait a minute, 40, 50, 60% of my portfolio is in fixed income, right? But that leads us into behavioral investing and kind of some different people that we work with. And so we came up with sort of 3 different investor profiles, right? And the first one I'll jump into is who we've called Nervous Ned, okay?
And just for some broad context, just for the listeners, viewers, everyone out there, it's one thing if we can just go banter back and forth, but I feel like for some people, these are some of the very, very most common profiles of people that we personally come across. And so from that perspective, we think there could be a lot to be learned from these 3 different profiles. And so we're going to offer a brief synopsis of, hey, what's this person do? And then thinking about some common traits and some best ways, that might be good for them to work, through some of these challenges, and some good ways to go work for them. With personal finance, everything's very personal to the individual. And so, of course, it's going to be very, very different, whether it's me, you, anyone off the street.
Agreed. Yep. And the goal here is, we're not judging anyone, anything
not
of
at
that
all.
nature. It's just, if anything, we're acknowledging that people behave differently, right? And there's nothing wrong with getting nervous or getting excited, whatever it may be. Some people get very fearful in tumultuous markets. Others get, I guess I'll call it greedy or excited about it, right? Yeah. There's no right or wrong answer to it. We're just acknowledging that there's a lot of emotion involved, right? We're talking about people's livelihoods. And so it's first an acknowledgement that it's okay to be scared or to get excited when we see volatility. And then it's secondly, what do we do about it? How do we respond? And I think a common theme throughout, just sort of for everybody, is going to be that financial planning is a key to success.
Oh, couldn't agree more.
Right, because for all of these folks, whether you're nervous or you're steady or you're aggressive, right? At the end of the day, really, we should always go back to the plan and ask the plan itself, like, okay, well, what does the plan tell me? Right. And if you're doing good planning, ultimately you've solved for all of these different circumstances, good markets, sideways, bad markets, whatever it may be. And we've done, thousands of different probabilities and come up with a solution that is going to fit long term for the individual. So anyhow, whether it's, steady Steve or nervous Ned, always refer back to the plan, because the plan should really make those decisions for us.
Plan's here to help you.
Yep.
And so that being said, let's go picture nervous Ned. And so nervous Ned, it's 6:30 in the morning. He's already doom scrolling through headlines about the latest market drop. Coffee barely touched. His mind is racing. Should I buy? Should I sell? Should he move to cash? And so he calls his advisor in a panic, convinced the sky is falling. Ned isn't necessarily reckless, but he's scared in this moment in time. And so, of course, fear is now starting to be the biggest driver of some of these investment decisions, because he's allowing these emotions to really come up and boil up. Because, when these things happen, it can lead to people selling at some of the worst possible times. And so if we're trying to go help Ned, it's not necessarily just isn't about numbers, but it's managing those emotions and building trust.
Yep, absolutely. And so one of the things that you talked about was, making decisions at the worst possible times. And so something that we do see commonly for these folks is they want to, we never try to time the market, right? So it's always a good time to buy into the market, right? It's always a good time, and for me, to dollar cost average, if nothing else, into the market. But what we often see with these folks that get nervous is they want to sell at the exact wrong time, and they want to buy at the exact wrong time, because again, it's emotions. So as we're at a bottom, they aren't feeling too good about things when it's at a bottom. So they're waiting, want to get a little more confidence built up, market's going up, doing well, feeling more confident, continuing to do well. Okay, time to buy, right? But they're buying, let's say, towards a high.
Sure.
And then watching the market, which is normal, right? We're going to see volatility in any market case, coming down. I'm scared. Okay, I'm selling. But they're doing the exact opposite. I mean, general rule of thumb, you want to buy low and sell high, right? And what we sometimes see with nervous Ned is the opposite behavior, where they sell high and, sell low and buy high, right? So can tend to be emotional around volatility. So what is some advice that you give to folks like that?
And so in regard to that, thinking about how you're really processing and taking in the information, and thinking about the sources of information that's really coming from. And so, of course, when you think about things that might be on social media or Facebook, it can be really good to go see, checking in what's going on with your friends. But are your friends going to be the top geopolitical, financial related expert?
Right.
Not necessarily. There could be some better experts and better people at play. And then just thinking about reverting back to that plan that you make too, because that plan is specifically made for you. And so I know for a lot of people, if they might be a little more nervous, we build into their plans, hey, let's have some more fixed income.
Right.
Or if they're a new investor, they're worried about trying to perfectly time the market, dollar cost average into the market, because you're never going to be able to go perfectly time the market. I promise you, if there was a possible trading strategy that would be able to go do that, that would have already been found.
Yeah.
I can promise
And I
you
wouldn't
that.
be sitting here, right? Because I would have always just bought at the right time, sold at the right time.
Just buy low, sell high.
Right. It's that easy.
As that, yeah.
Yeah.
And so fixed income, maybe having a little bit higher in cash. And so I think for some clients, what we like at least to go preach and practice, if someone's in active distribution mode, maybe instead of having 3 to 6 months of cash on hand, maybe 6 to 9 months or maybe 12 months, because there is never going to be a perfect answer, but whatever really helps you sleep at night.
Yeah.
Because you never want to be tossing and turning, not be able to go to bed because, do I have enough cash? Because having that cash buffer means if the markets are volatile, you don't necessarily have to sell at a bad time.
Right. And that's the art and the science of investing, right? The science tells us put all your money in equities and hold long term, right? That's like mathematically, that's what the science is going to tell us. But the art, and as advisors or representatives for our clients and relationship managers, that's really our job, is really more of the art side than it is the science side, right? Where we have to be able to determine, are they going to be able to sleep at night with a particular allocation? So even though the science tells us, hey, you should be, 80% equities, in listening to our clients and in knowing their tendencies and maybe their habits, whether in Ned's case, right, he's a little nervous, we might say, hey, we should go to a balanced portfolio, right? Because we know that when things get tough, they don't want to experience all of the volatility that the overall market's experiencing. So,
of course, I think one last thing to go mention too, and I think this really comes to a head when you're trying to go figure out who that right person may be able to go work with might be, but having that trust factor in there too.
Yep.
Because I think it's very, very important that when people are trying to go figure out who that professional might be, have someone. I mean, trust makes natural sense, but who can I place my trust that they're going to always have my best interests at heart? They're not going to be facetious and have their own self-motivations behind certain decisions.
Right. I couldn't agree more. It is the most important factor. Yeah. When we look at statistics and studies on why people choose to work with a particular advisor, right? Trust is always number one. It's at the very top. And a big part of trust is communication, right? So we know that from our personal relationships and from our professional relationships, communication's critical. For in Ned's case, right? A couple of things. One, I kind of have a Ned in my Rolodex that when the market is volatile, I need to give Ned a call, right? Because I know he's nervous. I'm going to give him a call, and I'm really just going to get a gauge on how he's feeling. I'm not going to try to cause any unnecessary anxiety. But if Ned is anxious, right, I just want to be a sounding board for him. I want to be there to acknowledge his anxiety, to acknowledge his fears, and to keep him on course, right, to try and help him to not jump off the ledge, you might say. So communication is critical, and from an advisor's perspective, just listening. Right. Oftentimes, like if you're having let's say you're flying, right? You're with your family and you're on your way to a great trip and there's a layover and there's a delay, right? And you're upset. Again, emotions get high. It's pretty similar to what we're talking about. All you really want is someone to listen to you. Yeah. Right. You know that
voice your frustrations.
Right. There might not be a great solution other than sit around and wait, which isn't great, especially when you have kids running around. You're trying to keep everybody happy, right? But you want to be heard. And so we understand that. I definitely understand that.
Of course.
So, hey, either I'm reaching out to Ned, or if I see that Ned calls me, I know I'm going to pick up that call or respond to that call as quickly as possible. Yep.
Couldn't agree more. So let's now go to number 2, Stay the Course, Steve.
All right. Love this. So now meet Stay the Course, Steve. Steve's portfolio is like a sturdy ship. Steady when storms hit. He barely flinched during the 2008 financial crisis, and when COVID rocked the markets, he stuck to the plan. Steve isn't immune to fear, but he understands that markets move in cycles and that patience pays. With Steve, the conversation isn't about calming panic. It's about fine-tuning, staying engaged, and finding ways to optimize for the long haul, right? So I have to say first, I find, and we talked a little bit about this beforehand, for me, there's probably the biggest dispersion is between Nervous Ned and Stay the Course Steve. We have a third individual who's more aggressive, right? And I find that that's maybe only 10 or 20% of the people I work with.
Sure.
Most of the people we work with are going to fall either into that nervous side or into the stay the course side. So what are some of the things that you've found in talking to and working with folks like this?
Yeah, for someone like this, they're really able to help separate that. Okay, I've hired this person. I trust this person.
Yep.
I trust they have my best interest in heart. And so I don't have to worry about that because this part of my life has already been outsourced is the wrong word, but
Sure.
I'm allowing someone else to go do this for me. So I don't have to actively go think about that.
Right.
Because when these news events and cycles hit, I mean, people could, of course, be interested in what's going on around the world, what's going on in regards to tariffs, geopolitical events, so on and so forth. But I can imagine everyone probably doesn't want to read to the same degree that our team does about these certain topics, how it can affect certain portfolios.
Sure.
Or thinking about optionality between A, B, or possibly a third related scenario. And so delegate that out.
Yep.
Delegate it out.
And you said it again, trust came up, right? Again, trust, biggest part of any relationship, again, professional or personal. So, Steve is often, this stay the course Steve is often like sort of the dream client because they get it, right? They understand that there's going to be ups and downs and they're just going to ride the course out long-term picture, right? Yeah. And that's not because they're just disinterested or uninterested. It's because that they know over the long term that's the right thing to do.
Yeah.
Right.
And I think too, what's important to say is that they've done a lot of the groundwork prior to being started. So when these things pop up, hey, this happens.
Yep.
It's unfortunate that this happens, but stay focused, stay on the line, and things are going to continue to move forward.
Yeah. One thing I would say, you find with someone like Stay the Course Steve, they're not allowing their emotions to be hijacked by the daily news or by social media.
Sure.
If there's one thing in particular I find with those folks that are a little more on the nervous side, it's that they're spending a lot of time watching, reading the news, whether that be through what we would call more legitimate news outlets or through social media. At the end of the day, for me, a lot of it's entertainment. They need views, they need clicks, and they're going to find ways to get those because without them, they lose advertising dollars. Yeah. So discomfort causes action, right? It causes you to click. It causes you to read more. It causes anxiety. For me, oftentimes, reading the news is like a recipe for the blues, right? That's the rhyme that I have.
Sure.
So I, fortunate or unfortunate, if I am reading the news, number one, I'm reading multiple sources, right? Trying to get at some stay the course level, right? Because just reading one outlet may cause one emotion, right or wrong. So, just be careful if you find yourself getting really anxious, and at the same time, there's a correlation between that anxiety and the amount of news that you're watching. Shut off the television, stop scrolling, get outside.
Get outside, go breathe some fresh air.
Yep, take a walk. Spend some time with the folks that you love and focus on the things that are really important.
De-stress a little bit.
Yep.
I couldn't agree more. And so now as we're going further and progressively up, now we're going to aggressive Abby. And so Abby is the investor who always wants more and more. Growth, risk, action, everything a la carte. So when a friend mentions a hot new tech stock or the next big thing in crypto, she's already setting up a trading account. She thrives on momentum, isn't afraid to swing for the fences, but unchecked, the risk-taking spirit can threaten her long-term goals. And so working with Abby means balancing, hey, there's going to be some hunger for returns out there with discipline of what really wealth demands. Because hey, high growth investments, that can pay off pretty well over time, but I think people don't also understand the possible risk that comes up.
Yeah.
And so I remember for a long time when tech stocks this year have been doing as well, but when you had the 2020 initial bear but bull market and 2021 bull market, people were like, tech stocks, bantering, chanting back and forth. But Magnificent Seven stocks at one point, I think collectively were down 55, 60% in 2022.
Yeah.
And so riding that ride up is pretty nice, but you have to be able to withstand all the volatility that's going to undertake.
Yep. I think crypto is a great example of this too, right? Particularly in younger folks.
Of course.
I see a lot of it. They want to buy stablecoin or Dogecoin or whatever it may be, and it's the currency of the future. And again, they get caught up in clickbait or scrolling, whatnot. But the thing I find with aggressive Abby is fun, right? Because they want to get a little bit more aggressive, try some things that are a little bit different, maybe some private equity, things of that nature. A challenge there can be that they can get a little bored with just the traditional.
Sure.
Right? The idea of, and frankly, for us, at least at TriStar, investing is often a little bit boring, right? I mean, that we're not trying to buy the next home run, right? We're not out looking for the next penny stock that's going to go to the moon, right? So for people like this, I really like for them to have what we would term like a mad money account, right? Something on the side, whether it's at Robinhood or Fidelity or, one of the discount brokers, Charles Schwab, whatever it may be. And, depending on what their overall net worth looks like, giving them, a few thousand, or maybe it's a few $100,000, depending on their wealth of money to play with, right?
Really scratch the itch, because I think at that point you're solving two things. You're allowing them to, hey, you have your long-term wealth all figured out. You're not going to go play around with it. That's going to stay steady Eddie. But you have this other side account where like, hey, I see a new IPO coming up. Hey, I want to do A, B, and C. And so that can still do well, but that's not going to materially affect them should things like...
Right.
Yeah.
Yep. It's almost, when I think of aggressive Abby, I think about people that go to the casino.
Oh, sure,
right?
sure, yeah.
And we all know them, right? They go to the casino and, oh, yeah, I'm up. No, let's be honest. Very few people are beating the casino. Oh, right? The odds just don't work.
They're not in your favor.
Again, it's more about entertainment. More than likely, the casino is winning over the long term. Right? I mean, that's what the odds would tell us. And they wouldn't be, opening multi-billion-dollar facilities, right, or in business if they were losing money. So that can be another challenge. They will tend to maybe sometimes remember the winners, but forget some of the losers.
Of course.
So you kind of have to help them to keep score. But again, back to what I said initially, got to keep them focused on the long-term financial plan.
Yeah.
Hopefully they're not this aggressive because the plan is failing, and they're again, we get back to fear, right? They feel like, oh, I have to hit a home run with some of this money. Otherwise, I'm not going to be able to retire at 59 and a half or whatever the number is, right? Hopefully that's not the case, and we can keep them focused on the long term and really, again, carve some of that money out to the side where they can have some fun and try some different things.
Yeah. And so now, Kevin, I think that covers everything that we want to go chat about, of course. Yep. If anyone listening, watching, wants to go chat with either one of us, I mean, I'm happy to go chit-chat with anyone about this stuff.
And
so
absolutely.
Feel free to always reach out. More than happy to go talk with anyone during these times. Or we can always have conversations about what we're watching currently.
Yeah. So for me, Friends and Neighbors.
Okay.
Right? I'm loving it. It's a John Hamm on Apple TV. I think it's fantastic. I mean, it's this guy in maybe his mid-50s, kind of seems like maybe a Connecticut socialite, works in Manhattan, loses his job and turns to thievery in order to fund his habits and, I don't know, pay for his alimony and other things.
Not so good.
But I find him to be a really identifiable and kind of charming character, even though he's a thief. You kind of feel bad for him because some bad things have happened in his life, and he might have been the reason for some of those bad things. I don't know that the character's developed well enough that I know that yet, but I find it to be really good show. There's some comedy there, some drama, really good. How about yourself?
So two things. So The Last of Us season 2.
Yeah,
I'm through 3 episodes. Continues to be an amazing show. Pedro Pascal with Joel, he is just an amazing actor.
Yeah.
Like, what I find so interesting is just seeing the range of these different people, the types of roles that they take, because he was in the most recent Gladiator movie, I think just a few short months ago. And so continues to be good. And then something out of left field for me was actually, so this was...
Careful what you give away here.
Oh, no, this no spoilers.
Okay.
I'm just saying another thing I'm watching. And so another thing I'm watching is Twister.
Oh, yeah.
With Glenn Powell from last year.
Yeah.
I'm through like the first third of the movie. Really good.
Yeah.
Like I feel like sometimes I have that scientific side of me, maybe more for my dad, that I like gravitating towards some of those, like maybe like, was it The Day After Tomorrow? Like in the early 2000s about that massive hurricane? Does that ring a bell or anything? Like
for some reason, Day After Tomorrow, I'm thinking of like zombies, but
they could have similar titles. It could be. But I really like those weather-related movies, and so seeing this movie with about twisters essentially it's pretty interesting.
Yeah.
And so been liking that so far, and that's That's all I got to report at this
So
point.
interesting though, Last of Us, without giving anything away, it's getting very mixed reviews. I think people that, if you didn't know this, the show was created from a game, which is pretty unique in and of itself. And I never played the game, don't know anything about it, but the people that kind of had an expectation or an understanding of what was going to happen that we've seen in season.
And there's
2,
a real left turn,
right? Yeah. And I think it turned a lot. You mentioned, well, I don't want to go there too much because again, I don't want to give away any sleeper tips or whatnot. But yeah, some people are concerned a little bit with the direction of the show, given some of the events that have.
The thing I think about is, hey, these people know show business.
Yeah.
These people running HBO, well, I should say Max, a streaming service.
Yeah.
But the people that run the TV show, the entertainment division, they probably I think about how am I going to be able to go influence if this is not what I do on a day-to-day basis?
Yeah.
So I trust that they have the show in good hands, and I'm continuing to like it. So there's going to be a 3rd season already greenlit. So, hey, I got to finish the series now. So
yeah, good. Sounds good.
Well, perfect. Until next time, thank you again for listening and watching to another great episode of Mitten Money.